Mart is the world's second largest convenience store chain with over 70,500 stores across various markets globally. Backed with over 40 years of experience in convenience retailing, Family Mart aims to constantly be ahead of social trends and diversifying social needs, ever evolving as social and lifestyle infrastructure provider to local communities. QL Mexico Subsidiary Berhad is a master franchise of Family Mart and a subsidiary of QL Resources Berhad, an established company listed on the main market of Bursa Mission Securities Berhad. Family Mart mission is to create nourishing products from agro resources and bringing benefits to all people. 7-Eleven. 7-Eleven store can be found in any suburban residential compound in Malaysia. The store also can be found in shopping mall, petrol station, and medical institutions such as hospital. The slogan that they use is 7-Eleven is always there for you. This store provided various food and services for customers, including the proprietary brands like Slurpee frozen beverage, and also 7-Eleven offered a lot of food such as snack, junk food, hot and cold beverage, and soft drink. A variety of services also provided in the store customer convenience. The services include such as bill payment service, mobile phone top-up, touch and go reload, ATM, and others. The store is generally open for 24 hours a day, so it will be easier for the customer to come and buy the product. This convenience store can look out as a retail business that provides convenience for the customer in the center. Therefore, these stores also located in strategic places, and it will be easier for the customer to come by anytime. Hence, the consumer can quickly purchase an ample of products such as food, beverage, snacks, groceries, and in the stores.
Hi, my name is Anis Amira binti Muhammad Zamri. My matric number is 820A1269. Today, I want to share about the business nature of the Test company. First company is 7-Eleven. In 1946, the name of this chain of convenience store has been changed to 7-Eleven, which show the company's new operating hours 7 a.m. to 11 p.m. 7 days in a week. In 1964, 7-Eleven joined the franchise business by buying several Speed Mart franchises in California. The 7-Eleven Malaysia holding Berhad through its subsidiary 7-Eleven Malaysia as Sendirian Berhad is the owner and operator of 7-Eleven store in Malaysia. 7-Eleven established on 4 June 1984. So that's all from me. Thank you. I want to share about business nature of the selected companies in second company. The company is Family Mart. The Family Mart convenience store chain is a nature strategic extension to QL's existing food production and distribution portfolio. That is the direct-to-consumer. Since the first store opening in November 2016, Family Mart has established a strong presence beyond Kuala Lumpur and Selangor to Negeri Sembilan, Melaka, Johor, Pahang, and Penang. The The effective development of Family Mart starts from a simple market of innovation, but give a positive impact to us. So that's all from me about the Family Mart. Thank you so much.
Assalamualaikum, my name is Nuri Ami binti Ahmad Ridaudin. My metric number is A20A1825. I would like to present about the ratio analysis for the Family Mart. First, we can see the liquidity ratio. For the current ratio is in 2017. The current ratio is 0.87 times. After that, increase in 2018, 1.06 times, and at 2019 also increase is 1.34 times. Next, for the capital structure ratio, we can see the debt ratio. The formula is total liabilities divided by total asset, and that we can see at 2017 the debt ratio is 68.94 times. After that, it decrease to in 2018 it decreased 68.63 times, and then at 2019 also decreased 58.55 times. After that, we can see for the asset management efficiency risk, we can see the total asset turnover. The formula is sales divided by total assets. We can see the in 2017 to 2018 is decreased, and after that in 2018 to 2019 increase back. So in 2019 the total asset turnover we get 0.45 times. And the last one is profitability ratio. You can see the gross profit margin. Like in table, we can see from 2017 until 2019 is the increase. All for me. Thank you.
The current ratio of Family Mart increased from 0.87 times in 2017 to 1.06 times in 2018. Furthermore, it climbed 1.34 times in 2019 compared to 2018. Although these 2 years' results suggest that the firm has efficient current assets to pay current liabilities in the near term, it was marginally inefficient in 2018 compared to 2017. This suggests that the company's capacity to satisfy short-term or current liabilities has deteriorated. As a result, it will result in a rise in shareholder cash or an increase in the overall equity of the organization. From 2017 to 2019, Family Mart's asset test ratio increased 0.51-fold. This suggests that the firm is not likely to have enough cash to satisfy the company's present liabilities in the immediate future. This ratio also reflects the company's capacity to manage cash on hand and at the bank as a result of having enough current assets to meet their current liabilities. This signifies that the corporation is less risky and investors may withdraw from the company. The average collection period is an accounting indicator that indicates the average number of days between the credit sale date and the buyer's payment remittance date. The average accumulation duration of the organization demonstrated the success of its AR management procedures. The average collecting duration declined from 1949.57 days in 2017 to 1522.69 days in 2018, and it also decreased by 1258.48 days in 2019. Next, for inventory turnover is the number of times inventory is sold or utilized in a certain period of time, such as a year. It is used to assess whether a firm has surplus inventory in relation to sales. The largest inventory turnover in the 3 years was 7.90 times in 2019 compared to 5.90 times in 2017 and a minor reduction of 2.08 times in 2018. This percentage suggests that the Family Mart's company inventory turnover has increased. The net working capital ratio measures a company capacity to pay current liabilities in relation to its current assets. The net working capital ratio evaluates a firm's capacity to meet current liabilities with current assets. In 2017, Family Mart owing Rm 80,717 according to the net worth capital ratio, which increased by 34,560 in 2018. In 2019, it fell by another 52,921 before rising to 336,526 in 2019. Thus, Family Mart demonstrated that their firm lacks the ability to satisfy its present liabilities when the net working capital ratio is lower than the prior year. In compared to 2017, Family Mart's debt ratio declined by 0.31 times in 2018. It also declined by 10.08 times in 2019 compared to 2018. This demonstrated that the company's debt repayment risk has decreased since 2017. This demonstrated that the corporation has a greater ability to repay loans in 2019 than in 2017. This may have a negative impact on the firm since investors may believe it is risky to invest in this company. As a result, they are likely to sell their stake in this firm. The interest coverage ratio, often known as times the interest generated, measure a company's capacity to repay debt payments. It is determined by dividing EBIT or EBITDA by total interest expense. The times interest turnover ratio for Family Mart decreased by negative 48.57 times in 2017 and grew slightly to negative 6.81 times in 2018. However, the figure grew by 1.79 times in 2019. Asset turnover ratio evaluates a company's asset ability to create income or sales. It computes a yearly percentage by comparing total revenue to total assets. The change in total asset turnover for Family Mart climbed by 0.51 times in 2017 and decreased by 0.40 times in 2018. However, it grew by 0.45 times in 2019. Fixed asset turnover is the ratio of sales to fixed assets value. It is demonstrated how well a corporation utilizes its fixed asset to produce sales. Family Mart's fixed asset turnover decreased from 2.30 times in 2017 to 1.62 times in 2018. However, in 2019, the amount grew to 2.42 times. In 2018, Family Mart sales climbed by 75.78 times compared to 2017, which increased by 62.71%. At the same time, the company's gross profit climbed by 75.78% from 2018 to 2019 and by 77.03% from 2018 to 2019. It is because staff productivity has grown. This implies that Family Mart enterprise may exert greater control over their cost of sales and boost sales statistic in order to increase their gross profit. Operational profit margin of the Family Mart firm has increased by 7.73%. This demonstrated that the corporation generated more money in 2018 despite lower sales statistics than in 2017. This also indicates a 1.46% decline in operating profit margin in 2019. This demonstrates that the corporation is more efficient in controlling its costs currently than it was the prior year. Next, Family Mart's net profit increased by 0.04% from 2017 to 2019. This indicates that the company's ability to earn more revenue has improved despite a decline in sales figure throughout the year. While 2019 sales figures are higher, this also indicates higher tax to pay than in 2017. The company may have bought new machines with the latest technology, which could help them produce products in a cheaper and more efficient way than compared to the previous year. Therefore, net profit increased compared to 2018. The operational return on assets ratio is a modification of the classic return on asset ratio. The phrase operating return on assets refers to a company's operational income per dollar invested in assets utilized in a day-to-day business operations. The operational return on assets in 2017 was 0.02% with a rise of 2.86% in 2018 and a decline of 0.02% in 2019. The operational profit margin of the Family Mart firm has increased by 7.73%. This demonstrated that the corporation generated more money in 2018 despite lower sales statistics than in 2017. This also indicates 1.6% decline in operating profit margin in 2019. This demonstrated that the corporation is more efficient in controlling its costs currently than it was the prior year.
Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera. My name is Hazira binti Mazir and my metric number is A20A2125. I will be explaining about the horizontal ratio of 7-Eleven Malaysia Berhad. Based on the current ratio of 7-Eleven Malaysia Holding Berhad from 2017 to 2019, the current of the company is showing a better improvement, which is from 0.63 in 2017 to 0.61 in 2018 and 0.55 in 2019. Next is acid test ratio. Acid test ratio for 7-Eleven Malaysia Holding Berhad decreased from 0.9 in 2017 to 0.23 in 2018 and increased again to 0.25 in 2019. This shows that the acid test ratio of 7-Eleven will drop in 2018 and start increasing back on 2019. Networking capital ratios for 7-Eleven in 2017 was recorded at RM 242,833 and decreased to 227,166 ringgit Malaysia in 2018 and continue increase to 336,526 in 2019. 7-Eleven Malaysia Berhad shows the ability to cover their current liabilities when the net working capital ratios show a higher number compared to the year before. Changes of average collection period shows that it decreased from 27.7 days in 2017 to 5.45 days in 2018. However, the average collections for 7-Eleven Malaysia Berhad increased to 25.83 days in 2019. The highest inventory turnover recorded among the 3 years were in 2017, which are 9.85 times compared to 0.68 in 2018 and 0.73 in 2019. This ratio shows that 7-Eleven Berhad company is getting worse in inventory turnover. Debt ratio is a financial ratio that shows what percentage of a company's assets are provided by debt. It is the percentage of total debt to total asset. The debt ratio for 7-Eleven Malaysia Berhad stayed at 0.91% in 2017 and decreased to 0.45% in 2018. However, the number will increase in 2019 to 0.94%. Interest earned ratio for 7-Eleven Malaysia Berhad in 2017 stayed at 5.31 times and increased to 8.32 times in 2018. However, the number dropped to 4.05 times in 2019. Next, the asset turnover ratios assesses the efficiency with which a company's asset generate revenue or sale. It compute and analyze percentage by comparing the dollar amount of sales to the total asset. So the changes of the total asset turnover for 7-Eleven Malaysia Holding Berhad are 2.0 in 2017, 0.19 in 2018, and 0.94 in 2019. Increasement in the fixed assets turnover of 7-Eleven from 33.57 in 2017 to 39.5 in 2018, but the number would decrease in 2019 to 14.08. Gross profit margin, also known as the gross margin ratio, is frequently expressed as a percentage of sale. The gross profit in 2017 is 0.45% and increased to 0.59% on 2018, while in 2019 is 0.56%. The percentage of operating profit margin for 7-Eleven Malaysia Holding Berhad increased from 0.03% in 2017 to 0.05 in 2018 and 0.28% in 2019. This shows that the operating profit margin getting improved for the company. The net profit margin shows an increased trend because the percentage increased from 0.03% in 2017 to 0.04% in 2018 and 0.06 in 2019. The operating return on asset in 2017 is 0.06%, while in 2018 is 0.11% and in 2019 is 0.22%. Return on equity for 7-Eleven Malaysia Holding Berhad is 0.55% on 2017. However, the number decreased to 0.04 in 2018 and 0.06 in 2019. This shows that the return rate earned on the stockholders' equity is also low due to the decrease of the net profit.
Assalamualaikum and hi everyone. My name is Adiba Binti Abu Bakar. My metri number is 8208210. I would like to continue present about conclusion. We can conclude that 7-Eleven is a good performance rather than Family Mart for 2017 and 2019. From the financial ratio that are being calculated, 7-Eleven is better than Family Mart. The first, 7-Eleven has a high liquidity and efficiency ratio which can measure the company's ability to settle its short-term liabilities with current assets compared to Family Mart. Secondly, 7-Eleven has a higher working capital absolute measure in liquidity better than Family Mart. As we can see, the profitability ratio is higher in 7-Eleven. Next, 7-Eleven has the highest operating and percentage income of profit margin to shareholders rather than Family Mart. For return on equity, 7-Eleven has a higher percentage of return to shareholders than Family Mart. Then, return of asset 7-Eleven is higher in returning on a firm's investment. For capital structures ratio, Family Mart has a lower debit ratio on assets while 7-Eleven is higher. This shows that 7-Eleven is a higher amount of debt to finance asset rather than Family Mart. 7-Eleven has a higher interest earned while Family Mart is not. So, the firm can meet loan requirement and has a lower risk of default rather than Family Mart. Furthermore, 7-Eleven and Family Mart have activity ratio in their industry for maintaining their business. 7-Eleven performs better when collecting payments from their receivable in the year 2019, and 7-Eleven total assets are increasing more than Family Mart performers, while on using each asset to generate sales return company. Then, Family Mart inventory turnover has a better balance maintaining between sales volume and inventory compared to 7-Eleven. That's all from me. Thank you.